Welcome back, amazing superstar traders. I'm super delighted to be with you again on this weekly market outlook. Sincerely, first, I want to seize this moment to apologize for last week, Monday, which for the first time in this year, we were unable to have our weekly market outlook. My sincere apologies. I know a lot of you will probably be looking out for the video, but I was kind of stranded, all right, in a place where I was unable to access the internet, and it was pretty well very difficult for me. So thank you so much for your understanding. And this week we're back stronger, bigger, and better. I know you missed me, so let's jump straight into business so we keep the video short and simple, right? So, first we're looking at the economic calendar for this week. And of course, we've got a handful of data that we're expecting for this week, okay? First, Monday is clear of all high impact expected news, except for bank holidays that we will be experiencing in Great Britain, okay? Except for that bank holiday we'll be experiencing in Great Britain. So UK banks will be closed in observance of the summer bank holiday. Okay, so that will be happening August 28th, which is today, all through today. So, of course, there probably will be low volatility on the Great Britain pound, and probably any other currency that would be paired with the Great Britain pound. If there is high volatility, then probably the market will be driving in the direction of the pair, okay, of the currency paired with the Great Britain pound. Except for that, on Tuesday we've got some consumer confidence reports that we're expecting for the USD by 3 p.m. and also by 2 p.m. we've got the S&P and CS composites year on year, and I think the high impact expected news that we should also probably put our eyes on. Okay, I'm not going to say much about that. There's a few that I really want to talk about. On Wednesday, we'll be expecting some CPI data for the Aussie and also some CPI data for the Euro, and that of course will be coming. That of course will be coming by all day, especially for the German prelim CPI. Okay, and of course we've got the ADP non-farm employment change, which is the automatic data processing incorporated. All right, I've always talked about this. This particular data is more like the NFP that we would be expecting, but usually released 2 days before the main NFP report. And what this does is that it's more like a simulation to try to forecast and try to know what's going to be the real data that will be released by the government 2 days prior. Okay, sorry, 2 days later. Okay, so that's what the ADP, the automatic data processing incorporated company, does. All right, so they are forecasting that of course we're going to be having we're going to be having employment change as 201,000. Wait, don't forget that on Tuesday, sorry, I forgot to mention, don't forget that on Tuesday we are having the job opening and labor turnover survey report as well. The job opening and the labor turnover survey. This is where we would know the amount of jobs that are available and how much of that job was seized. Okay, so it's forecasted that job openings that will be available will be around 9,700,000 jobs that will be open. 9,700,000 jobs that will be open. So how much of this job will be seized? What's the percentage of this job that will be opened will be seized? Okay, that's what we will be knowing on Friday. But okay, we're expecting some job openings on Tuesday. So the ADP is to tell us, like, give us more like an early idea on how much of these 9 million jobs that people are going to be utilizing. Okay, so that gives us more like an early forecast as well to the NFP we will be expecting 2 days after, which will be coming up on Friday. So we keep our eyes on these data as well because it causes a lot of high volatility in the market. And then on Thursday, we will be experiencing the manufacturing PMI. Okay, On Thursday, we'll be experiencing the manufacturing PM high, and of course, the core PCE, and also unemployment claims. Of course, when job openings and labor turnover report comes out, the next to follow it is unemployment claims before finally the NFP reports, okay, the non-farm payroll reports. So on Thursday, being August 31st, we'll be expecting also the unemployment claims. And over 236,000 people are forecasted to claim that they don't have jobs in the US. That's pretty a good number, okay? That's actually a huge number. So last time we saw 230,000 people claiming they don't have jobs. It is forecasted about 236,000 people will be claiming they don't have job. And on Friday, which is the big day, we will be expecting by 1:30 p.m. the non-farm payroll reports to be released. Okay, that's where we will be expecting. Okay, so lastly, we saw the employment change for last month will be around 187,000. Okay, it is forecasted to be around 169,000 this month. And then, of course, the average hourly earnings to also drop from about 0.4% to about 0.3%. If this happens, it simply means that the dollar is severely going to be weakened. Okay, the dollar is severely going to be weakened. And of course, I'm going to be showing you that technically. This is fundamentally, I will be showing you that shortly technically. So if these reports happens to play out, okay, let me mark that out for you to see. If these reports happen to play out just as the way it is, trust me, the dollar is going to weak severely. All right. That I'm speaking based on the fact that, okay, if we have average hourly earnings dropping from 0.4% to around 0.3%, and then of course 1,187,000 already is not a good figure for people to for the number of people that gained job, all right, that had jobs in the last month. It wasn't actually a good figure. And so if we're seeing figures lower than that for this month, it simply means it's going to be really bad for the United States dollar. It's going to really crash land, okay? So we will look at that as well very shortly. And then by 3 p.m., of course, we have the manufacturing PMI still for the USD. Don't forget, also, by that 1:30 p.m. September 1st, which is first Friday of September, we're also expecting some GDP for the Canadian dollar and CPI by 7:30 a.m. for the Swiss franc. Let's quickly look at the dollar index and let's see what we will be expecting on the dollar index. Okay, so I have actually looked at the dollar index and I have marked out this stuff. So let me just show you. So for this week, what I'm expecting is very simple. I'm expecting a little bullish rally. Okay, from Monday till at least on Friday, we should see some consolidations and a bullish rally into around 104.733. Okay, that's where I'm expecting the dollar to come into 104.733. And of course, around that zone there, if it gets to that zone latest by Friday, then we will be seeing the mighty drop on the dollar. And I'm expecting it to at least come into 103.128. Okay, 103.128. Now, this is the technical explanation of what I was just showing you on the fundamental reports that we were seeing. So the dollar will manage to at least rally into this zone somewhere around in. It mustn't come into 104.733. It mustn't come into that zone. It's already playing around this significant zone, which is from 104.416 to 104.733. Now, anything from that zone, if it gets to Friday, then I'll be expecting a huge drop in the dollar. So this gives us a good sense that it simply means we'll be looking out for buy opportunity on GBP USD on Friday, a buy opportunity on AUD USD, a buy opportunity on Euro USD, perhaps a buy opportunity as well on gold. But gold is a little more technical, so we'll still look at that. I'm just giving you a good example. And then also we will be looking out for a mighty sell opportunity on USD JPY come on Friday. All right. So let's just let the market evolve and let the market play out just like we've seen and we are analyzing. All right. Then quickly, I also want to look at the Japanese index because of course most of the pairs that I will be talking about this week, at least one or two of them have the Japanese index. So for the Japanese index, we see this mighty bearish rally, okay? But something really is trying to happen here. I also see a little break of structure, I think on the 4-hourly time frame. Let me show you that. Yeah, on the 4-hourly time frame, I see a double bottom here. So I saw a double bottom here. And then, of course, what I saw next was a break of structure. Okay, that's what I saw next. Should you call it a break of structure? Should you call it a change of character? Whatever it is, this is what we can find here. Okay, beautiful. So we saw a break of structure, a bust here, a double bottom here, which means price failed to break. Price failed to continue to push lower, right? So it formed a double bottom because it's now the sellers are now gradually weakening to continue to push prices lower. And then of course we finally now saw a change of character. So this retracement is only going to find support anywhere around this zone and be going up. Okay. So for us to still know that, I am going to use my Fibonacci retracement tool to know the depth of retracement. And I haven't used my Fibonacci retracement tool to know my depth of retracement. I can see prices trading around the 61.8 to 79% level, which is the very discounted zone I'll be looking out for JPY to kick off. So it simply means that this week I will be more buy biased for the Japanese index, okay? I'll be more buy biased for the Japanese index. Speaking technically, I'll be more buy biased for the Japanese index, and I'm expecting the Japanese index to at least be strengthened this week, okay? This is what I'm expecting, okay? So this is what I'm actually expecting to happen on the JPY this week. All right, so we've seen the dollar. The dollar is going to rally a bit. The dollar is going to rally a bit and then have a push to the upside and then finally have a mighty drop. And then the JPY is going to be having a push to the upside, which I am expecting this week. All things are clear. All right. We've seen JPY drop to a significant level, okay, which is more like our potential trading area. And then, of course, even using the commodity channel index, we see a bullish confirmation on the daily time frame. And also, I think a bullish confirmation, okay, yet to find a bullish confirmation on the 4-hourly time frame. And of course, we're getting JPY fly to the upside. If that's the case, it simply means that we probably would be seeing pairs like the USD JPY, Euro JPY, GBP JPY have some significant movement in a particular direction. All right, so this brings me to the assets that I have that will fetch you money this week. All right, don't forget, I've significantly maintained over 80% accuracy. All right, over 80% accuracy in giving you these signals. So let's quickly go over. I'm going to give you just 2 signals on JPY pairs, and then I still have about 5 assets that will still fetch you money this week. All right, there's just so many. I had to curtail them down to about 7. So let's not waste time. I hope you have funded your accounts and you're ready to take these live trades and make real money for yourself. By the way, if you're new to this YouTube channel, please leave a thumbs up for this video. Okay, just do that. It doesn't take you anything, right? Just click on that like icon. Okay, click on the like icon. Okay, if you've done that, don't also forget to subscribe to this YouTube channel. All right. Then lastly, before we go, if you are looking for the best broker to trade with, it's no other broker than Equity. Okay, Equity is our #1 and most preferred broker. Why? Because of the tight spread, because of fast trade execution, because they are complete A-book broker, and it simply means that your trades cannot be manipulated. All right, what else? You're going to have a good customer support, and not only that, you are having the EQ Market family as your family to do business with and also to discuss with, and you have free access to me so long as you're trading with Equity. So why not? How do you get signed up on Equity account? I'm just going to simply tell you. Just simply go to www.eqmarketsglobal. All right, just go to www.eqmarketsglobal.com. All right, now on this site, you are going to be able to find the sign in icon. Just simply click on, go to your browser, type in www.𝗟𝗜𝗘𝗦𝗨𝗕𝗘.com. All right. And then you're going to be able to sign up an account with Equity, our most preferred broker. And then you're going to have opportunity to meet myself and every of my team members who are going to be helping you make consistent profit in this market. And by the way, don't forget, we've got amazing robots that have also consistently made profit for all of our community members in the last 6 months, and that's the 𝗟𝗓𝗏 robot. All right, the 𝗟𝗓𝗏 robot have been doing crazy and amazing things. I can't really say all of that here in this video because this is the weekly market outlook. So what you simply have to do is click on www.eqmarketsglobal.com, sign up an account. Somebody's going to give you a call, and then you also ask about the 𝗟𝗓𝗏 robot and also ask about how to meet me and have personal discussions with me. I'll probably be there to help you. All right. And also, you can follow us on all of our social media handles and also reach us on all social media handles. The links are in the description below. All right. So if you've not liked this video, please do like, leave a comment for me, and let's go. So the first I want to give you is GBP JPY. Where are you? So on GBP JPY, okay, let me take these out. Beautiful, amazing. So on GBP JPY, I am expecting a little push to the upside, and then before we are going to find a drop. This is a risk to reward of 1:7. So if you're risking $10, you're hoping to make about $70. If you're risking $100 on this trade, you're hoping to get $700. No jokes, no playing on GBP JPY. All right. So let me just quickly explain why I'm actually looking out for a sell opportunity on GBP JPY, right? So let me just quickly explain that to us very quickly. So GBP JPY haven't had a massive bullish rally. I don't want to go over to the monthly, the weekly, and all that. Okay, but let me just see. Amazing. All right. So after having had a massive bullish rally, right, on the weekly time frame, we see a bearish confirmation. First, we saw a liquidity resting on this head here, and then we saw prices clear the liquidity, and then of course we saw a bearish confirmation, right? And after these bearish confirmations, all we will be expecting is a massive push to the downside, whether you like it or not. This is a massive push to the downside we're expecting, right? So, but that's on the weekly time frame. We've already got a sell confirmation on the weekly time frame. Sellers are saying with the CCI here, what it interprets is that sellers are saying that, look, we are no longer buyers rather. Buyers are saying, look, we're no longer interested to continue to push prices to the upside. We're tired. And so sellers will jump in the market and begin to push prices below. So once we get that confirmation on the weekly time frame, let's scale down to the daily time frame so I begin to explain to you. So this was where the liquidity was resting here, right? So we had the liquidity resting here, and of course, market came back, cleared liquidity, okay? It cleared liquidity. So what we are expecting is more, especially a break of the structure, all right? This, right? So this was the lowest high. We're expecting prices to come back and break this lowest high. But before that, okay, before that, we can even see the break of structure somewhere around here. Let's look at it on the 4-hourly time frame so you understand that. All right. So this continued to form higher highs and higher lows, and then of course this was the highest low, and then of course we saw the break of structure here. So I could still take this as my break of structure. All right, I could still take this as my break of structure. So what I'm expecting, okay, this to the upside is liquidity grab, right? This is liquidity grab, sorry. So at least we could find liquidity and a clearing of the liquidity, and we can find a break of structure. What we're expecting is prices to rally back into either a fair value gap or another point of interest before we take a sell. So at least I've explained these two for you. Clearing liquidity. Once we find liquidity and we notice that liquidity has been cleared, that is all. If you can't find liquidity, then you're going to be the liquidity in the market. Okay. All that simply means is that your stop loss will surely be grabbed. because you're going to be the one to give liquidity to the market. But since we've seen liquidity here and a grab of that liquidity and also a break of structure, it simply means we're safe to take a sell on this trade. So what would I do? I simply take my Fibonacci retracement tool so that I can know the depth of bullish retracement that I'm expecting on this market. Sorry about that. So you can see that once I have my retracement, I'm expecting at least prices to retrace back into the 61.8 retracement level, which is somewhere around this zone, which I've already marked out. And then, of course, that's where I will be looking out for confirmation to enter my trade. So if you want to know the price level for that, right, the price level for my entry is 185.520. For GBP JPY, 185.520. And of course, I'll be placing my stop loss. I'll be placing my stop loss around 186.177. 186.177, and I'll be expecting the drop to come as far as 180.667. 180.667. So someone might be asking me, how many pips is the stop loss? So let's find out together. The stop loss is going to be around 69 pips. Okay, stop loss is going to be around, is it 69? No, 67 pips. But the take profit is going to be around 485 pips. Okay, take profit is going to be around 485 pips, and that of course makes this trade a 1:7 risk to reward. So amazing, guys. I wish you all the best on GBP JPY. Don't forget my entries again. My entry is around 185.520. My stop loss is around 186.194, and of course my final take profit is around 180.650. So this is good. You can place actually a sell limit trade on GBP JPY. The next I want to give you is Euro JPY as well. Okay, so I want to give you Euro JPY because every condition I explained to you on GBP JPY, you can see that it has already occurred or played out as well on Euro JPY. So first there was liquidity here. Should we call this a grab of liquidity? Most likely yes. Then we saw the break of structure here, right? We saw the break of structure here. Okay, and then liquidity resting here was cleared, right? So it simply means that we're expecting a retracement into a significant level around this zone, and then prices is going to fall. More especially, I can also see a fair value gap here. So it's more like rational for me to say that I'm expecting my price to come into the fair value gap here, and then of course from that zone find resistance and take it all the way down. But still, I don't want to just rely only on the fair value gap that I can find there. What I'll simply do is I'll still take my Fibonacci retracement tool and I'll try to know the depth of retracement. And of course, the fair value gap is actually resting on a very premium price area, which is a 61.8 to the 79% level. So yes, it's still right for me to say that probably I'm expecting prices to come into my fair value gap somewhere around here. Okay, so there's a fair value gap here, there's another fair value gap here, but let's use this particular fair value gap. So I'm expecting prices to come into that zone and then of course sell off. So yeah, I can be having this and my stop loss to be a little above the 79% level, right? So this is what I would be expecting on okay, I'm coming. Let's see this. So most likely I'll be expecting prices to drop to this point. So this is 1:17, right? On Euro JPY. This is 1:17 on Euro JPY. So let me give you the data. Let me give you my entry, my exit levels, and so you can as well know that for yourself. So on Euro JPY, I will be looking at entering the market if it drives back into at least a 158.657. That would be my entry. So even if you're placing a sell limit, your entry level should be around 158.657. And then of course our stop loss can be somewhere around 159.103. 159.103. And then of course my final take profit is somewhere around 151.494. 151.494. All right. So this is what I will be expecting on Euro JPY for this week. Good luck, guys. Good luck. Good luck. Don't miss these trades. These trades are carefully analyzed for you. So those are the two JPY trades that I told you I want to give you. All right. So yeah. 2 weeks ago, I talked about one trade and it has been playing out very well. And I still want to give you the signal on that trade. Okay. It's already playing out. It's already playing out, but I still want to recommend that for you. So this is an instant execution. This is an instant execution. Let me show you. Amazing. All right, so this is the Euro GBP trade. All right, this is the Euro GBP trade. Remember that the last time I made analysis on Euro GBP trade, I was showing you this amazing trend line that was playing out here. Let's look at it on the weekly time frame. I think we'll better appreciate it over there on weekly time frame. All right, so we saw this amazing trend line that ran all the way from somewhere around here, touching this zone, and this is of course the third touch. Yeah, sometimes the third touch can be broken, but of course we know and we were told that the third touch confirms a particular trend line, right? So let's believe so that the third touch confirms a trend line, and it's going to confirm this particular trend line for us to take a bullish move to the upside, right? Of course, we see bullish momentum as well on the Euro GBP on the weekly time frame. We see bullish confirmation and bullish dominance in the market already. We scale down to the daily time frame as well. We've got a bullish confirmation as well using the CCI. So of course, I will be expecting that prices will at least rally back to this top here, which is around 0.88737. 0.88737. That's what I'll be expecting prices to rally to in the coming weeks. So if you're jumping into this market, just know that your stop loss is going to be a little big, but it's still going to be worth it because this is presenting you with at least a 1:6 risk to reward. All right, so you can jump into this market at the current market price. All right, you can have your first take profit somewhere around 0.86668. 0.86668, right? After that level, we probably would see more like a little retracement. You can, after the retracement, you can buy again and drive it all the way to this top around 0.88726. Okay, that's on Euro GBP. So I've given you three, guys: GBP JPY, Euro JPY, and Euro GBP. The next I'm going to give you, guys, I hope you are ready for this one. This is going to present you with over 1:2. Okay, let me not say it. Let's go over. Remember, we're expecting the dollar to weaken this week. It simply means that AUD is going to have strength over the dollar, GBP is going to have strength over the dollar, Euro is going to have strength over the dollar. But most likely, sorry about that. So yeah. So let me just show you this on the weekly time frame. Yeah. On the weekly time frame as well, I can find this amazing trend line happening on AUD USD. Okay, AUD USD. So first I had this first touch here, I had a second touch, and then also I have this third touch. But amazingly, this bullish rally, when I check that out using my FIB, okay, amazing. Good. So when I checked this massive bullish movement, I can see the depth of retracement coming back into my very discounted zone, which is from 61.8 to 79 level. All right. So it simply means this gives me another confidence aside the trend line that prices is in a discounted area where I'll be looking out for a buy opportunity, right? So that's more like double confirmation for me to want to take on a buy trade on AUD USD. As well, I'm going to be using the commodity channel index. It's yet to give me a bullish confirmation, but on the daily time frame, already I've got a bullish confirmation on the daily time frame. So if I were you, I would opt into AUD USD at market execution, at instant execution, right? That's what I'm going to be doing. I'm going to be upping into this market at instant execution. And then, of course, my stop loss is going to be below this lowest wick here. That's where my stop loss is going to be, below this lowest wick here. So just pardon me a minute. Let me see this. So my stop loss is going to be somewhere around 0.63436. 0.63436. Okay. And then, of course, my final take profit I'm expecting should come into 0.68930. 0.68930. So this is more like an instant execution. Or if you still want to wait and find more confirmations, then it's pretty fine. But this is more like an instant execution, and it will present you with 1:about 7.8 risks to reward. All right. So if you jump into this market now, risking $20, you are expecting to cut away over $150 on this particular trade on AUD USD. So good luck. This is the fourth trade. I want to give you the fifth trade, which is USD card. Okay, let's look at USD card. So on USD card, I'm expecting a sell actually, right? I'm expecting first to buy, then a sell. Remember, the dollar is going to be strengthened a bit or consolidate and then drop towards Thursday, Friday, right? So first I was able to find my point of interest somewhere around this level here. Let me show you that level. Let me show you that level. Amazing. So I was able to find my point of interest using the other block here that caused this massive imbalance. Okay, this is the other block that caused this massive imbalance. So let's go over back and let's see how we can utilize that as our point of interest. Okay, so yes, I see that prices have finally come into the zone, clearing also this liquidity. But then I'm expecting most especially that prices will most likely come back into the zone before selling off. So on USD card, although this is going to be more like a little risky trade, okay, a little more risky than AUD USD and Euro GBP and the rest of them I just showed you, but it's still going to be worth a try. All right, still going to be worth a try. You probably might want to wait for the daily time frame to confirm for a sell using your commodity channel index. Okay, but yes, I think by the time it will confirm, prices must have rallied back into where I have my entry, which is somewhere around 1.36282. 1.36282. Once I get a sell confirmation around that zone, I see prices rally back into that zone. So I'm going to place a sell limit, right? I'm going to be placing a sell limit. My entry at around 1.36286, and then my stop loss is going to be around 1.36549. Let's see how many pips we're risking for stop. Okay, we're risking only about 26 pips for stop. Okay, we're risking only about 26 pips for stop. And of course, we're expecting to take about 128 pips to the downside. That's a proper 1:5. Okay, 1:4.9, 1:5. All right. So this is a bit risky trade. Be aware. But if it plays out, then good luck to us. The next trade I want to give to you is NZD USD. NZD USD is going to present us with amazing. In fact, this is the biggest trade for this week because this is presenting us with 1:20.45 risks to reward. So even if we're risking $20 on this trade, we're expecting to cash out $400. And of course, if you're putting $100 on the line, we're expecting to cash out $2,000 on this trade if it plays out. But of course, it's not going to play out. It's not going to play out completely this week. So please follow me. Let me just show you all the stuff. Yeah. So yes. NZD USD, we would be looking for a buy opportunity as well. Is yet to confirm on the weekly time frame, but I think it confirmed on the daily time frame already that it's going to actually buy. All right. So how I was able to get all of these zones, okay, this particular zone. So first and foremost, let me show you. I think I would better show you on the weekly time frame. Yeah. So on the weekly time frame, first we had this massive bullish push to the upside that broke structure here. All right. If you look at it here, it broke structure, cleared out this high here. Okay. to form another high, although not higher than this previous one, and then we saw a bearish retracement. So this is for me more like a retracement because we've already seen some change of character around here. So we're expecting that prices will begin to rally to the upside, but it was only retracing to find a good support zone. So I use my fib retracement, and then of course I have my retracement. I have my fib drawn from point A here to point B so that I can know the depth of retracement, and I see prices come exactly into 61.8, exactly into 61.8, and of course that's how I got that level for entry. Okay, exactly into 61.8 is where I found that prices came into. Let's look at it on the daily time frame so you see it, right? So this is how I got that zone. So let's go back now. So if this truly is a retracement into that discounted zone, and then we're looking for a buy opportunity, simply means this massive move is going to be really favorable to us. So yes, since I have confirmation as well, using my CCI on the daily time frame, I will just up into this market for a buy. And then of course you can have your stop loss to be a bit tight. Okay, you can have your stop loss to be a bit tight. And then, of course, your stop loss can be 0.58746 or lower than that so that you can allow your trades to breathe, okay? And then my final take profit, at least for this week or for next week, is going to be around 0.64036. 0.64036. If you look at that, to the final take profit, that is somewhere at around 500 pip movement. Okay, that's about 500 pip movement. And our stop loss is going to be around 32 to at least 40 pip movement. All right. So good luck as well on this trade. So your entry is at instant execution, which is somewhere around 0.59009. 0.59009. Your stop loss is going to be somewhere around 0.58678 on NZD USD. And the final take profit is going to be around 0.64 0.64022. All right, but you can be taking partials until the final take profit, or you can be trailing your stop until the final take profit. However it works best for you, please do so, because this is an amazing trade opportunity on NZD USD. Oh my goodness, I think I've given you 6. Should I give you the last one? Let me see. I've given you 6 trade setups, and out of the 6, 5 were over 80% sure, except for USD card that I told you I wasn't too sure. All right, so let's leave GBP and ZD. Probably I'll make a video about it later in the week. But I've given you Euro GBP. I've given you first we started with Euro GBP, a buy instant execution, and then of course we also went into GBP JPY as well. We said GBP JPY we're looking for sell opportunity, and as well Euro JPY we're looking for sell opportunity, and then on AUD USD we're looking for a buy opportunity, on the and USD card we're looking for a sell opportunity, and also the amazing one is to 20 risk to reward on NZD USD that we also talked about. So have a profitable week this week. Have a profitable trade this week rather. And please do well to trade these trade setups, right? They are carefully planned, carefully selected. So I hope it fetches you money, good money this week. And please don't forget to leave a comment for me in the comment section, and also leave a thumbs up for this video. I will see you in the next weekly market outlook, and also many more programs that we're having coming up for this week. Bye for now. Thank you.